Hey traders and investors, it's Serge Berger here. Today I want to talk about something very important as far as investor psychology goes, or sort of trader psychology is probably the better term. And that has to do with remaining flexible no matter what happens. And I think, quite frankly, this bullish reversal we've seen in stocks here, I have the chart of the S&P 500 up, is of epic proportions and something that I'm not quite sure I've ever really seen in my lifetime of trading 15 plus years of doing this in terms of not just the fact that it occurred, but where it occurred. And I think right now, more than any time, it really is important that we keep in mind that this can continue to the upside. But again, before we go into that, let's understand the importance of being flexible. So if you look at the charts, and I think I've pointed this out repetitively to anyone, and certainly for subscribers, we go through this every day, all day long, measuring the market's mood. Basically, if you were to look at this from a logarithmic point of view, this major uptrend, you would have seen it break. The uptrend in a non-logarithmic chart, of course, remains intact. However, we did break massively below the 200-day, and all the others and the indices broke as well through most measurements. And that really was something where one would have expected to be able to short this or to short this market at a lower high, which hand raised I did do. What I did not do, I did not short at the lows. In fact, I bought at the lows. We bought at the lows in the for the subscribers for all the portfolios as well, of course. And we ended up selling, somewhere near 1920-ish, 1910 or something like that, and actually started legging into short positions. Of course, those are totally going against us right now. So this now really becomes a matter of remaining flexible. As much as this is basically almost unprecedented, there've only been a few times when the stock market rallied this much and made a series of higher highs or I guess higher lows, like 12 days in a row or something like that. That has only happened a few times. So, particularly considering the context of broken chart in a late cyclical environment, one would have thought that a very high probability is that we'll make a lower high. We did not. We made a higher high, so we need to remain flexible. So the question that becomes what? If you didn't buy down here, certainly buying up here, right now is chasing the market higher, right? So I think some sort of consolidation is very much in order at the very least. On the other hand, you also need to consider if you are short this market, this is probably not exactly the time to get out. You can wait for some sort of consolidation, but this consolidation does not have to come in price. It doesn't have to go lower. It can go sideways. So again, it's very important to be aware of that. So if you did not buy down here, if you held on to your long positions, well done. This is not the time necessarily to add to new positions. If you short this market, depending on where you did it, if you short it down here, then by all means, this is no time to hope for this to revisit anytime soon, I don't think. But certainly shorting here is not the best opportunity either. Give this market a little bit of time. We have a big week this week, from political things happening to to economic data to central bank stuff. So pretty much anything that we could want is coming out this week, and I expect some sort of consolidation, at least in time, somewhere sideways, maybe above 1992,000 is in order. I hope this makes sense. If you got any questions, please let me know. You can hit me on my Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.